So, no, like 2:30 class. Good afternoon, my dear children. Uh, in the previous class, we saw about the functions of RBA. What are the things that we discussed? The functions of RBA. You might have understood. You must read your textbook daily, whatever the lesson is taught, or on whatever day the online class is conducted. So you must go through your textbook. Now, the present part deals with specific objectives of monetary policy. You know, there are some words, terms that you must understand in a clear manner. The economy. Economy is a system of consumption, production, and exchange of goods. Okay, that is called economy. Now, we are going to deal about the specific objectives of monetary policy. Monetary means money or currency. Okay, you should not understand it in another way. Monetary means what? Currency or money. So, objectives of monetary policy. Now, the monetary policy, the economists like Wickstein and Hay, then Robertson, are the chief exponents of the neutral money. Monetary policy is the macroeconomic policy being laid down by central bank towards the management of money supply and the rate of interest. It is the demand-side economic policy used by the government of a country to achieve the national or the total objectives or macro objectives like inflation, consumption, growth, and liquidity. Okay, so these are the objectives where the monetary policy attains. And the monetary policy which contains the various measures. You know, the monetary policy is also considered very important in measuring the economic development of a country or economic growth of a country. The monetary policy gained its significance after the Second World War. Okay, uh, this this credit goes to Milton Friedman, who is associated with the doctrine of monetarism. You see the word monetarism. Monetarism means theory that inflation is caused by an increase in the supply of money. Okay, that is called monetarism. So he dealt with the doctrine of monetarism and who received the Nobel Prize in 1976. He boldly announced in his book The monetary history of the United States, 1876 and 1960, that the Great Depression of the 90s, the Great Depression of the 1930s was largely the outcome of the bungling monetary policies of the Federal Reserve System. Bungling, that is, not in a correct way, bungling policies. Federal, the system of government, that is, the power is shared between the one central government and several regional governments, that is called federal. So, Federal Reserve System. So, this is about the introduction of monetary policy. Now, let us come to the objectives of monetary policy. Monetary policy in developed countries has to serve the function of stabilization and maintaining a proper equilibrium in the economy. But in case of underdeveloped countries, the monetary policy has to be more dynamic so as to fill the gap or meet the requirements of the expanding economy by creating suitable conditions for economic progress. Now it is now largely recognized and widely recognized that the monetary policy can be a powerful tool of economic transformation. Okay, so now let us see the objectives of monetary policy one by one. The first is neutrality of money. As I already told you in the beginning, the economists like Whitfield, Hay, and Robertson are the chief exponents of neutral money. Exponent, a person who believes good or believes a theory or an idea, a belief, and supports the system, whether it is good or useful. So they are called exponents. So they are the chief exponents, three economists. Who are they? Wicksteed, Hayek, and Robertson. So these are the three economists of neutral money. Now, the monetary policy is the main objective of, this the tradition way of the exchange of goods and the spending money for the export and import. Here, the neutrality of money is considered very, very important. So, as the monetary policy or monetary changes could be the root cause of all economic problems or in the economy. So, according to the neutralists, the monetary policy changes cause distortion and disturbances in the proper operation of the currency or the exchange system of the country. Okay, this is about the neutrality of money. And next is exchange rate stability. Exchange rate stability is, it was the traditional objectives of monetary policy. You know, these, the policies, the stable prices are to be expected here. The exchange rates are to be stable. If there is stability maintained in the exchange rate, that will boost the economic conditions to the higher level. Okay, so the exchange rate is also considered very important. And whenever there was a disequilibrium in the exchange rate, and it was corrected automatically. So the exchange rate is also considered very important and as one of the objectives of monetary policy. It must be noted that if there is instability in the exchange rate, it will result in outflow or inflow of gold, resulting in the unfavorable conditions of the balance of payments. Okay, see, there was a popularly known as expand currency and credit when the gold is coming in, contract currency and credit when gold is going out. So this was also one of the policies maintained in those days. But this will correct the disequilibrium in the balance of payments and the stability rate in the exchange will be maintained. Okay, so this system will correct. And this is about the exchange rate stability. And next comes the price stability. Price stability is also one of the important functions of or objectives of the monetary policy. Economists Gustav Castle and Keynes suggested price stabilization as the most important objective of monetary policy. Okay, two economists suggested. Who are they? Keynes and Gustav Castle. So these two suggested price stabilization as the most important objectives of monetary policy. Now, the stable prices lay public confidence and it promotes business activity and provides the increase in productivity. So, as a consequence, there is a general way of prosperity and welfare in the community. Okay, so the price stability does not mean that price rigidity or price, stagnation. A mild increase in the price level provides a tonic for the economic growth. Okay, so the price stability is the most important, the objective of the monetary policy. There is no stable price. Definitely, there won't be effective activities found in the economy. That is why it is expected that price stability should be followed in the economic condition. And next comes a full employment. What do you mean by full employment? I think you must know what full employment means. Full employment is a situation in which every able-bodied person who is willing to work and at the prevailing wage rate is called full employment. In other words, the people who are willing to work and able to work must have employment. That is also a given meaning for full employment. But here, under monetary objectives, how this is understood. During world depression, the problem of unemployment had increased rapidly. So this caused the economic conditions in a poor unemployment and even sometimes the low investment ratio and the economic conditions were pathetic. So this full employment that is why full employment was considered very essential in the economic, monetary policy. And at the same time, with the publication of Keynes, a general theory of employment, interest on money in 1936, the objective of full employment was considered very important as the chief objective of the monetary policy. Okay, you see how the full employment is very essential in formulating the monetary policy. And next is economic growth. Economic growth is the process whereby the real per capita income of a country increases over a long period of time. Okay, and it implies an increase in the total fiscal or real output and production of goods for the satisfaction of human wants. So the monetary policy should encourage, should promote the equilibrium between the demand for money and the total production capacity, and further increasing or creating the suitable conditions for favorable balance of payments. Okay, so for bringing equality between demand and supply, the monetary policy is considered very important. Okay, so that is about the economic growth. And the last is equilibrium in the balance of payments. Equilibrium in the balance of payments is also one of the objectives of monetary policy, which brings the balance between the goods and services and the payments. Okay. Now here there must be balance of payments in the exchange rate. If there is imbalance, this will severely affect the economic conditions of their country. Okay, so that is about the equilibrium in the balance of payments. Now, so with this, the specific objectives of monetary policy are over, and you must understand this very carefully, and you go through point by point. Okay, while reading, you must understand all these concepts. Next, there are advancements taken place in the banking sector. What are the advancements that have been taken place in the banking sector? Or NEFT, National Electronic Transfer. Okay, this is also one of the advancement in the banking sector. And next is RGTS, real-time gross settlement. Now there is important difference between these two. NEFT transfer as limit, no limit. Okay, any transfer from one bank to another bank has no limit under NEFT, but there is limit under RGTS, that is real-time gross settlement. What is that limit? 2 lakhs. 2 lakhs is the limit for transferring the money from one bank to another bank. That is these two. Okay. And next is merger of banks. Union Cabinet has decided to merge the 5 associate banks of State Bank Group with State Bank of India in 2017. Okay, so the purpose of merging is to functions of the bank should be done in a proper way, and also the credit system should be undertaken in a successful way. So for this purpose, the merger bill was passed in the parliament, and because of this, the subsidiary banks have ceased to exist. Okay, so the five banks merged with the State Bank of India or the State Bank of Travancore and the State Bank of Hyderabad, the State Bank of Mysore, and the State Bank of Travancore. So these are the five banks merged with the State Bank of India. Now, the next is we see about capital market and money market. The money market is the process of mechanism which deals with only short-term funds, that is loaned and borrowed. Okay, loaned and borrowed is done under money market. The market which deals with investment instruments like bonds, equities, and mortgage, mortgage. All these come under capital market. So this is about capital market and money market. Then lastly, we come to know about demonetization. Demonetization is the act of stripping a currency unit of its status as legal tender. It occurs whenever there is a change of national currency. Okay, we understood this. What is demonetization? Demonetization refers to the act of stripping. Stripping means removing the value. Okay, stripping a currency unit of its value or status as legal tender, then it happens or it occurs whenever there is a change of national currency. On 8th November, that is in 2016, the Prime Minister Narendra Modi announced the demonetization of all 500 rupee and 1000 rupee notes. Okay, so because of this, 99% of these currency notes reach to the RBI. Whatever the policy that has been formulated should have some objectives. Similarly, demonetization has some objectives. What are they? One is removing, that is, removing the black money from the people. Okay, what is first? Removing black money from the people. And the number two, stopping of corruption. Then number three, stopping terror funds. Okay, and next is curbing fake currency. Okay, so these are the main objectives of demonetization for which demonetization was done or formulated by the Prime Minister of India. Okay, so these are all the things that have been explained to you in a general manner. Okay, these are the general things you must understand, but from the examination point of view, demonetization is very essential. And the objectives of monetary policy are also very essential. These two are very important from the examination point of view. And for your improving the knowledge of the economics or general points regarding the banks, these are the things that you must keep in your mind. Okay, so thank you for your patience. And my dear students, you please, whatever the thing that you have understood, please go through your textbook. As far as possible, get all the textbook by yourself, and especially economics textbook, and read line by line and understand the concept. Uh, You may have a plan that after reopening of schools, you can read everything. Now you have ample time to utilize for reading your textbook. Please use it. Thank you.